Okay, starting now in the symposium, Entrepreneur's Dilemma, Sharing the Baby with the Public and the Risk of Losing It, with moderator Chirag Sagar of Mission Matters and panelists Peter Goldstein, CEO and author from Exchange Listing, Joe Rosa, founder of Rosa Realty, and Derek Kearns, partner at Centri Business Consulting. Welcome to the stage, gentlemen.
Fantastic. Awesome. Well, why don't we go around and just first start off with some intros. I guess I could just kick it off. For many of you, my company's called Mission Matters. We're a full media platform, reach millions of people a month, create tons of content through podcasts. We've conducted over 6,500 interviews. And also, we're a full media, a personal brand accelerator. So we build a brand of executives of publicly traded companies and founders of private companies through books, through podcasts, through PR, and through a variety of speaking opportunities. Maybe we just go down the row?
Sure. So Joe Rosa, founder and CEO of Rosa Holdings. We are a very disruptive real estate brokerage based out of Florida. We have about 2,500 agents right now across the United States. Just closed our IPO in October, so kind of new to the public markets, and very excited to be able to have the opportunity to speak here today.
Great. Thanks, Chirag. Derek Kearns. I'm a partner and the SEC practice leader at Centri Business Consulting. Centri is an advisory firm. We focus in three core areas: the capital markets, transactions, and emerging growth companies and industries, providing financial reporting, tax advisory, valuation, risk advisory services in those areas. We've worked on over 100 SPAC and capital markets transactions over the past several years, and that's what we do.
Hi, I'm Peter Goldstein. I'm the CEO and co-founder of Exchange Listing. We're an advisory firm. We specialize in working with private companies that are doing an IPO and taking them through a readiness program, which could be anywhere from 6, 12, or 18 months prior to their listing. We also work with existing public companies on a lower exchange that want to graduate to an uplisting on a senior exchange, such as the New York Stock Exchange, NASDAQ, or the CBOE as a new entry. And Joe happens to be a client. We have the benefit of working with him and taking his company public. We work with a lot of great entrepreneurs who have the vision of taking their company onto a senior exchange, and we facilitate making that happen, bringing in the relationships, the resources, the capital, and other investment banking relationships to facilitate a listing. I'm also the co-founder of MS Capital, which is a specialized boutique investment fund, and we work in providing bridge capital to companies that want to list or have a special event where they need capital to help to execute on the next stage of growth of their company.
Cool. Awesome. All right. Well, we're discussing, taking companies public, right? And so I guess the first question is, what drives an entrepreneur, and also what factors determine when is a good time to take a company public? Go down.
Well, that's a great question. So we actually first started considering going public back in probably one of the better times. I would say it was early 2021 when we first started actually kind of exploring the opportunity. For us, as a real estate brokerage that had achieved great success in the state of Florida, and we were expanding across the United States, I really saw it as an opportunity to kind of be able to get on a larger stage, to be able to actually, be able to tell the world kind of, who we are and why we're different, why we really are defining, what it is to be agent-centric in our real estate space. And so we started to kind of, I didn't understand the microcap market and kind of how that world even worked. And when I realized that, there's an opportunity, actually. We are an actual business with real revenue, with growth, with a lot of opportunity here for the future. This is something that we should consider. And so one of my focuses was trying to always be ahead of the curve. And one of the trends that I started seeing really take place within my industry was creating this opportunity for agent ownership. And so as we had the opportunity to kind of do our due diligence and had the opportunity to meet Peter and his amazing team and realize, this is something that is going to fit exactly what our needs are. So we decided to go down this path, and here we are today.
Cool. Awesome.
Great. Yeah, maybe some thoughts on kind of that process. I think one thing that we always, try to educate our clients on is, getting up to that public event is, it's really just the beginning of the company's capital markets journey. So, obviously, Peter's very familiar with all the readiness, everything that goes into that, but there's a lot ahead of you, kind of post-close. And just keeping those things in mind, making sure that the company is prepared and ready for all the regulatory compliance, and everything that comes along with being a public company.
I don't know if you want to add, but actually I do have a follow-up to that. So what are pros and cons about taking a company public?
You want me to go first?
Sure.
Yeah. So, we were kind of joking before. It just depends on what time of day it is. I'll probably give you a different response. Definitely, there's been obviously a lot more pros. Obviously, the cons have been dealing with right out the gates, having to deal with shorts and understanding how that world works. And, obviously a lot of what you do now is completely transparent. It's all out there. If you're going to say that you're going to do something, you better do it. I learned that real quick, that if you're going to talk the talk, you have to walk the walk. But the pros, for us, are extremely outweigh the cons. And so 100% don't regret it. There was about 5 or 10 minutes, I would say, earlier on, maybe where I did. But I'm just excited, obviously, to have the opportunity now to be able to be here. And I always kind of joked with my team for the last 24 or 36 months. It felt like I just want an opportunity to get in the game. And so here we are. So it's time to rock and roll.
Yeah, I think obviously pros like Joe mentioned. You get a lot more brand awareness,
Sure.
right?
Yep.
Access to capital. There's several pros. On the flip side, there's a lot more compliance that costs money, right? And just you need to make sure that you have all your ducks in a row and you're meeting compliance deadlines and things like that. So, those are probably some of the disadvantages or, things on the flip side. But
Yeah. I guess, how about Peter? How about yourself?
I think the biggest pros are the two obvious ones: access to capital and access to liquidity. And the misnomer is that you have to be a unicorn in order to do that. Smaller companies can do it. Joe is demonstrated that, where you can access capital. In this market, one of the cons is that the capital is reduced, as well as the valuations are greatly reduced. The currency, as in Joe's case as an example, is being used for acquisitions. It's also very significant to be able to use to attract human resources. So the combination of all those are the pros. The cons in this environment, especially what I see with new entries, are that they're not fully understanding of what it takes to get listed, and then more importantly, to be a sustainable public company. And it's like running now 2 separate businesses. So, we could talk lots about that, but the list of pros to me, because I'm obviously bullish and pro capital markets, are significant to have transformational capital to be able to grow your business and access that you couldn't get through the VC, or the PE community, where then in those situations you often have to give up control. So one of the pros to me at the earlier stages of accessing money as a public company is you don't necessarily have to give up control, and you have the ability then to grow and create that awareness and early stage public company and advance and mature over time.
Got it. What, I guess if you're taking into consideration of taking private capital versus public capital, or going public rather, how do you know which is the better route to go? And that makes sense. I know it's situational, but I guess just from your your experience directly, and then even from companies that you guys have advised and worked with, how have you kind of advised and steered the entrepreneurs that you guys are working with?
So, we never took a dollar up until obviously we were getting ready to go down this path of going public. So I did explore, and I did obviously look at opportunities to raise funds privately. I just kind of felt like long term, the goals that we had at La Rosa, and with the dreams and aspirations of us being able to not just be a Florida brand or an East Coast brand, but really in essence to become a global brand. Being able to, when I go into markets, for example, like we have just now entered into Texas, and I'm talking to folks there, in Houston, where we have a brand new office. When I go to the table and I sit down and I say, well, look, this is who we are. A lot of folks initially before, well, who's La Rosa? I haven't heard of you before. But when I say, hey, we're a publicly traded company that trades on NASDAQ, it opens up, their eyes a little bit more. And so there's a lot more variables, obviously, that come into play. But a lot of what our long-term goals really fitted more in alignment with us going down the public route. So that's why we really, in essence, at the end of the day, chose that over raising funds privately. So.
And even like companies that you guys have advised, I guess, how have you steered or how have you kind of guided them, however they've been looking to raise capital?
We like to look at the capital stack from formation, and I think it's important for companies that are considering going public that they build a capital stack over time, meaning a seed round, could be a Series A or it could just be an additional round of capital leading into and building a shareholder base. But the bottom line is it boils down to access. So if you have access, then you have different choices. Many of the companies that we've looked at choose not to go down the private equity or the venture capital route, and now you're looking at that as a viable option. And you may not have access, or it's an option to those other pools of capital. So it really is unique and, as you said, very situationally based.
Yeah, and to your point, Peter, I think most companies that are looking to do a public capital transaction have gone through those initial seed rounds. I think for our clients, we're not necessarily directing them one way or the other, but more so kind of educating them on the requirements of what has to be done at each stage. So that they're prepared and they can be successful whichever route they take.
When you're going public, how do you know which route to take? Like whether Reg A or SPAC or reverse merger, how do you know what makes the most sense for you? And I guess since you went down that route, how did that work for you and even companies that you guys have advised? Which route have you steered entrepreneurs?
So I mean, we were presented with definitely different routes to go. I just felt the more traditional route was better for us. I mean, we had different opportunities even on the SPAC side, but I also had some concerns, as later on, as more time was passing, hearing some of the challenges that folks that did go the SPAC route, what they experienced, and we felt we were in a good position to be able just to go the normal route, and it worked out well for us.
I think it depends on the circumstances. Every company is different. Regarding the SPAC route, some advantages there. Maybe slightly compressed timeline compared to a regular way IPO. The SPAC has already gone through the public offering process, so that could be an advantage to certain companies. On the flip side, most of the SPAC deals that we've seen, are also requiring some additional back-end, financing, bridge financing, to get the deals done. So, maybe kind of two sides of the coin there. But again, I think, also could depend on timing, right? So the IPO market, ebbs and flows. And so, if a company needs access to capital quickly, and the IPO market is not very strong, then, there's other options out there as well.
Yeah, I think to add to that, it's about understanding those options and the pros and cons. Often the shortcuts don't end up being shortcut in the way of a SPAC or reverse merger, and there's other costs that may be hidden or inherent into the merger that you're doing. So as a shameless plug, I say start with making sure you have a good advisor who understands this market. We talk to a lot of companies, CEOs and boards who have known the prior IPO market or the SPAC, done SPACs. Landscape's just changed recently in the SPAC world. SEC now has new provisions that are going to make that much more difficult. So we're an advocate of going through the front door. We think there's much more control over the process than if you're doing a reverse merger or a SPAC or some alternative. Direct listings, I think, are going to become more and more prevalent, are an interesting option for companies that have a broad shareholder base and have the ability to navigate without a typically underwritten offering. So it's really about having the knowledge on the current market and the market intelligence and knowing which is the best choice for your unique situation.
How do you, I'm actually curious, considering the timing right now that we're in, how are you advising entrepreneurs? Is it a good time to go public now? Do we wait, or I mean, we have an election coming up. Like, there's so many different variables, taken into account. How are you steering your entrepreneurs with our current times right now?
I'll go first. Yeah. So I mean, look, it's all about timing. So, like we always, preach in the real estate world, right? You want to get in when it's low and then sell when it's high, right? So we want an opportunity. Yeah, we looked at when we first started to go down this path. It was a great market, and then as the market turned and everything started to shift around, yeah, there was definitely some consideration. Should we take a step back? But at the end of the day, I didn't want to get in the game late. I want to have the opportunity to get in now. And so when that market does turn, we're going to be well positioned now to be able to truly take our company now to that next level. So it was a journey. It was an experience for sure. I could probably write at least 4 or 5 books on the whole experience. And even at the end of the day, finally, with all the back and forth and the challenges in the market, I just ended up raising about 85% of the money myself, just because I realized, you know what, I need to get in now. I don't want to wait until when the market is at the top again. And then all of a sudden now it's going to be that much more challenging to be able to become that leader in the real estate space.
Yes.
I mean, thoughts on timing, I think it all just depends on, the company's, need and desire for raising capital. If there's a need, then, I think, your advisors will kind of get you, to your goal and help you, achieve that. So, I think there's different vehicles that are out there that can be used with, different levels of complexity and timing. So just kind of, case by case.
Yeah, my message is a little bit different. I believe it's critical to be prepared for when the market opens up. It's not if it will open up, it's a matter of when.
Right.
There's more money in the sidelines now than probably we've ever seen. And what we experienced in 2021 was an extremely wide open market. It's going to come back. So the message really is to be prepared. It takes a good 6, 9, 12 months to be properly positioned. And so a message that I'm delivering to anybody who's really seriously considering an IPO is be ready so that you can take advantage of when that market does reopen. And if you don't start now, you're always going to be that 6, 9, 12 months away. So it is also extremely valuable to have your company IPO ready, putting the systems and the controls in place, the governance, if you will, operating as if you were a public company, even when you're still private, will increase your attractiveness to investors. Even if you choose not to go public because of the timing, you will benefit greatly as an operator or as an organization, and the ability to attract and retain investor interest.
Yeah.
Go for it.
Sorry, I was just going to double click on that and couldn't agree more, Peter. We've definitely seen a lot more, whether it's bankers, attorneys, companies coming to us and saying, hey, we're thinking about doing a deal with, such and such company at some point in the future. They need to be ready. Can you guys start now? Because we want them to be ready, whether it's getting through their audits or, setting up processes and procedures and things like that, so that, they know that, when the market opens, they're ready to go.
Yeah.
And maybe to click again is the audit component. That's the longest lead time in any of this process. And so the ability to prepare for the audit and then to implement the audit, knowing that, you're now going to be operating within, the confines as quarterly reporting. And I would venture to say that practicing being a reporting company and understanding that every quarter you have to deliver, it's not optional. That's a huge transition from a private company into what it is to be public, one that most underestimate. How long does it take, what you need to do to go through a 2-year full PCAOB audit, and then to be able to maintain timely reporting standards.
Yep.
Yeah, what is the general checklist of what entrepreneurs need to know or be aware of before going public? Like, what is that checklist? And I guess what's a general timetable of, from when you made the decision to even officially going public, and
Sure.
what's that process been like navigating?
Well, I mean, listen, I'll start off by saying this. You're only as good as kind of who you surround yourself with. So as we were kind of then venturing into initially exploring about the opportunity and if we want to go down this path, you know, it was new to me, right? It was kind of almost like Martian. I really didn't understand some of the requirements. The audit process was something that was completely new to me. Obviously, we've done internal audits, and we've done as a franchising company before. We've had to obviously have some level of audits done, but you're only as good as who you surround yourself with. So, you know, not to give a plug here to Exchange, and don't blush here now,
We'll take it.
Peter. But obviously, I wouldn't be where I am today, especially in this crazy IPO market over the last 12, 18 months, if it wasn't for these guys. Exchange really kind of quarterbacked me through the whole entire process and taught me and kind of went through each of these different items that we had to start to then kind of prepare for. And, you know, it's if any private business owners are out there that are considering it, don't try to do it by yourself. You definitely need that guidance. And they introduced me to everybody that, you know, is part of our team now from, you know, the legal, the auditing side, that have played an integral part in it. So it's a lot. But, you know, again, when you have the right people around you, the checklists are a lot easier because if you try to figure it out on your own, can you do it? Yeah, of course. But having that team around you is, to me, essential.
Yeah, I mean, you need to be operating as a public company before you become a public company. You know, as far as the checklist and things to consider, I mean, you know, obviously we've talked about financial statements, right? You're going to have quarterly financial statements filed. You know, you've got, you know, corporate governance. You're going to have to, you know, opine, you know, whether it's internally or, you know, have an audit done on internal controls at some point. So processes, procedures, you know, there's new requirements for disclosures about cybersecurity and IT risk. It is kind of a hot topic now. So, you know, corporate governance, there's, the list is long, but, you know, it's not unbearable.
I'm actually talking about this at noon for any of you who want to take a deeper dive. We've created 10 critical steps in that checklist, and that information is all available. I'm happy to share it. Each one of those is a step along the journey, and each one of them requires its own timeline and study. And so we like to use 12 months as a sweet spot. Right? We've changed our process. You know, if you were a large cap or a mid cap, you know, you'd be going to a Deloitte or a McKinsey or an Accenture, and they'd be spending 2 years probably prepping you. That doesn't happen very much in the micro cap and small cap space. So that's where we've stepped in. And that checklist is really working from the issuer side, in addition to coordinating and working with, you know, the bankers, the auditors, you know, your legal counsel, the exchange. So it's too much to get into in the time. Even when I'm presenting, I need more than 20 minutes to go through that checklist. I think the key takeaway for anybody considering this is like everything else, it's going to take longer, cost more, and be much harder than you realize.
Cool. And it looks like we're nearing like the last couple of questions here. So are there any entrepreneurs or examples of entrepreneurs that have regretted going public once they did go public?
I mean, for me, I haven't experienced that. Everybody that I spoke to, I mean, the only, I would say, common advice I would get is don't look at the stock initially, right? You'll drive yourself crazy. And, you know, listen, it's going to be a different world, a different experience for you, and it has been. Like I said earlier, I mean, I was kind of joking. I mean, maybe it was not 5 minutes, maybe it was 2 minutes where I kind of regretted it. But it immediately went away when I had the opportunity to really now begin to kind of execute on what our game plan has always been. So most of the folks that I've come encountered to, and these gentlemen probably have had more interaction, but everybody that I spoke to, even leading up to it, was always encouraging. The only negative thing that I would get is, well, maybe not right now. Like, why would you want to go public in this market? But I already kind of answered, you know, before why I felt like it was a necessity for us to move forward.
Yeah, I mean, don't let the additional, you know, work and costs kind of get in the way of your corporate goals. I think is maybe, you know, one of the takeaways, and probably something that you can vouch for. You know, I don't know specific example of a company that regretted it. I mean, I know there's, you know, we've all probably read stories about, you know, like Steve Jobs, or, you know, I think of Howard Schultz from Starbucks, I think at one point said he felt like he had sold his soul by taking Starbucks public. but look at Apple and Starbucks, or some of the most recognized companies in the world. So I think it's a great thing.
I know one. It was myself. So I took 2 of my own companies public. The first one, I made every mistake possible. Even my then legal counsel learned with me over the course of a very difficult journey. And I had very long and significant regrets about taking my company back. This is 25 years ago and going public. And I didn't have a guide. I didn't have a checklist. I didn't have an understanding of what I was getting into. I just had that entrepreneurial dream and vision that I would go do it myself. And then I did it a second time, and I regretted that one much less. There are significant pros and cons. To me, the benefits have always outweighed, but that first time of doing it on my own, the hard way, I have some very strong regrets about that. Maybe regret's not the right word. I would say I would have some considerations about the value exchange of migrating from private to public. This was also on the OTC markets. It's also 25 years ago. So all those lessons learned are rolled in today. I would have no regrets in guiding and or advising somebody to take their company public when they're 100% fully committed. The only other people that I know who have had regrets is when they didn't go in 100% committed. And like anything else in life, if you're not 100% committed, things can go wrong, and that can bring you about to have regrets in your choices.
Cool. Awesome. I know we're a little over time here, but thanks so much for all the insights. And I don't know if we have time for questions. Okay, cool. Any questions?
Thank you guys for the presentation. Very well done. I was a partner at Deloitte, and I had a client that went on a dual track. They did a confidential filing. Investment bank valued it at about $300 million. And then a strategic came along and paid them $600 million. So how do you guys feel about a dual track?
About what?
A dual track, confidential filing, and also looking at a strategic to possibly acquire. There was VC money in this one from Silicon Valley. So.
How can you argue with the double on your valuation?
Right. I mean, but do you guys preach that as an option normally?
From my side, we want that commitment, right? But if someone along the journey, what I believe is you're going to increase the value to a potential trade sale, and all for it because it's to the benefit of all parties, right? So it's that optionality, and it's going back to then the belief that if you're building your entity and adding value along the way, you're going to be much more attractive. And I think even further to your point, if you trigger on going public and then you look at a trade sale, you get an even higher valuation.
Hi, Peter, you wrote a book recently. I'm a little intrigued by it. Can you kind of go over what's in the book in terms of, is there a path to going public in the book? Is the checklist that you mentioned in the book?
Yeah, so thanks for the question. I wrote the book based upon my experience. It was a COVID project for me, and the book is really organized to give entrepreneurs the knowledge of what we're talking about now, and let them understand that it's possible to take your company public without being a unicorn. It's a very practical guide, and in addition to my insight, I brought in experts in the industry. So in each chapter takes you through one of the steps in the journey, and then we have other industry professionals, including members of New York Stock Exchange, NASDAQ, London Stock Exchange, giving their tips to entrepreneurs who want to understand what it is to take this process on their own. Thanks.
All right, thank you, gentlemen. All right, thank you.
Thanks.
Thank you.
Well done.